Hi guys, welcome to Crypto Delhi, the show with me where I cover a lot of updates and news from India and the rest of the world. My name is Diksha and I am the PR manager at GateChain. It's so nice to see you again this week. Let's get started. I was reading. First things first, as I said, I was reading, about this discussion which was held a couple of days back, where the PM of India was really supportive of the blockchain technology and how he, showed his interest in the technology and how he's really welcoming the investments that are happening in the space, from across the world in the country. I've also talked about, how the trading volume has surged more than 800% since the ban was lifted, the so-called ban which was put in 2018. So yeah, there has been a lot of progress when it comes to cryptocurrencies and the blockchain technology because obviously investors are seeing it, the government is seeing it, and how important it is to democratize finance, overall. So I think that's a big thing, and that should also reflect on the draft of the law that that the government's working on. We've been reading that as well. It said that they're working on a draft which would apparently put a ban to cryptocurrencies in India again. But let's see what happens because there's so many positive um, comments from the government, from the investors, from the companies. In fact, a lot of established IT firms in India have taken a lot of steps, in this direction. They've introduced an educational course. They've partnered with with blockchain companies. So that's very positive, and that will reflect in the law or the draft or the rule that comes out whenever it does. So that's very interesting. As I said in a keynote address in India that was held a few days back, Indian Prime Minister pitched the country as a haven for multinational investors in tech and blockchain space. Well, obviously we talked about how Bitcoin received a huge validation when MicroStrategy bought 250 millions in Bitcoin, and that was I think the first company who's ever bet on the success of Bitcoin in a way like this. So that was really interesting, and it also saw that the Bitcoin gold correlation touched 70% for the first time. It's not been bad in previous quarters as well. It's been about 50% or 60%, but with this event, it touched 70%, which is a huge progress again. Hi there. I cannot speak Chinese. I'm so sorry. Well, also talking about the DeFi space, where the most interesting event that happened was when YAM, it touched 500 million, and then again, went down to zero. And after the community thought it had gotten whales to save it, it really didn't happen, and we're going to talk about it a little more in detail as we progress in the session. But I want to cover all the important things first, and then probably pick some of the most interesting topics and elaborate on that. Um, Hi. Well, we also have, you don't understand English, but I see you can write English. Well, we also have a lot of Chinese sessions, Chinese speaking sessions on GateChain Live, which are equally interesting. Yeah. Well, the next one's that Ethereum transaction fees have touched an all-time high. So the Ethereum gas fees reached an all-time high of about 6.8 million recently last week, beating 2017's high of 4.5 million. And Bitcoin transaction fees have remained low in comparison to Ethereum, reaching only 1.4 million in total on the same day, last week, Wednesday. The numbers obviously reflect a high demand for Ethereum. A lot of other things, Ethereum 2.0 release, which is upcoming. They have released the testnet, and also the price has increased 100% since the Bitcoin halving, which is huge. So these things, obviously have affected the transaction fees, and it obviously means that Ethereum, is a very high demand, is in a very high demand at this point, and the willingness to pay that kind of transaction fees obviously supports that. Let's see when Ethereum 2.0 rolls out, what happens. How the progress has been so incredible already. Where does it go next is going to be really interesting. Now, also, JP Morgan, is partnering with Consensus. So apparently, JP Morgan is planning to invest 20 million towards Ethereum infrastructure firm Consensus, which has been trying to raise money for months now. And the plan is basically part of the 50 million convertible debt deal, which with other investors. And as a part of this deal, a Consensus would take over the maintenance of JP Morgan's Quorum's assets. And Consensus has also been previously involved in this with a lot of other companies, with a lot of high-profile enterprises implementation that use Quorum assets, which is an open source blockchain platform, guys. Well, let's talk about some of some of the tokens and the token designs, and we'll also pick up things from YAM and what happened there in the DeFi space. So the token, the way they're designed has really progressed, over past few years. Like if you really go back to 2015 to 2016, there was a bunch of projects that were showing utility tokens, which basically had users to buy, buy in to interact with the protocol or the project or the network, but they really didn't have any incentive to hold after that. And now this trend of utility creation continued till about 2017 when the ICOs were on peak. But once the market cooled down, the ICO market cooled down, these tokens were proved to be actually kind of not that useful. And they were also named futility tokens. in that, what exactly it means is that they had no way to capture any sort of value that's generated by the underlying protocol or the network, for which they're supposed to be utilized for. So most of them ended up down more than 99% of from their initial value or their all-time high value. So, and now it's 2020, obviously, and the hottest tokens in Ethereum are the ones that are having a strong, that are having a strong time. So, and resemble something more like a stock or equity. Clear examples are, here could be Lend, KNC, SNX, which all enable token holders to share the revenues generated by the underlying network or the protocol, and also participate in the governance and even act as an insurance for the network. Well, these tokens all have been around since 2017. It's not that these are the new tokens that have been developed. They have been around, since 2017, as I said, but it's only over the past few months, that they have appeared significantly in, or risen significantly in value. alongside other competitive protocols and networks, who are also increasing in value. As I gave you three examples here. Now, this is primarily because these tokens were redesigned and, were redesigned to match the market needs, to match the blockchain demand or the kind of interests the institutional investors are having these days, and they are also constantly updated. So that's a very important thing, and a learning for a lot of these new or upcoming networks or tokens. Yeah, as I said, they were redesigned from ground up, by their development teams using the lessons learned, which didn't give them too much in 2017 and even earlier. Now, another important aspect of these tokens is that some of them have supply sinks, and that is, there are mechanisms that act to take a supply out of circulation, which has a different kind of an effect on their price. Now, the clearest example here is SNX, the native token of synthetics. What makes it really special is that it has a built-in incentive mechanism that works to align all the people that are associated in its ecosystem. And basically, how it works is that users, put up their SNX as collateral through the synthetics ecosystem, and they generate cents SNX with this collateral, and then each week on an SNX a denominated reward or an exchange fee reward. And the real magic here is that SNX reward is locked for a year. So from the claim date, which means that increase in supply does not, cannot really give you any instant gains or profits. These incentives have to, have work to really fasten the network and its growth and the involvement of people that are interested in this kind of a network. So a lot of these tokens are really out in circulation, and that's been really working for them, and it's a very interesting concept, to be honest. Well, the business model that I talked about, is something that a lot of other projects are now looking to replicate and improve in order to strengthen their liquidity mining programs. And that's an interesting thing to go and check, right? I mean, which are some of the networks that are trying to redesign their business models this way, and introduce interesting concepts to enhance the liquidity, the circulation in the market. I think this one was very interesting. Um, Honestly, a good liquidity mining program is one that's constantly being redesigned and being tweaked and being improved upon, by the team, keeping in mind the interest of the community, the market, the trend, and yeah, it can't be something that's fixed, because this industry is really growing, and it's growing very fast. So it's very important that we redesign these programs in some of the newer networks, or even the networks that have been there, the way Ethereum does all the time. Well, lastly, I really want to share this exciting news. As we were talking about DeFi, we have announced that we're building a DeFi network on our highly secure public blockchain GateChain that has gone live already. And it's going to feature the stablecoin USDG, decentralized exchange, and a decentralized loan and liquidity mining. And Gate.io's public blockchain, as is already live. The main exciting feature is the vault account that can revoke a transaction where you feel that you've lost the password or somebody's hacked it. You can revoke that transaction, and the technology that supports this revocable transactions quite strong that we've built. and it's a very high performance. It's also backed by a very high performance and fault tolerant system, which makes it highly scalable and highly secure. And and it's going to really address the issue which is widely prevalent in the crypto space, which is for the asset security, the fund security that the cryptocurrency space has. And yeah, this way it's going to guarantee 100% security to your funds that you lock in GateChain. Obviously, GateChain token is going to be the native token of GateChain and will be a very vital part of the entire ecosystem, even in the DeFi network. It will be used as a collateral asset for getting GateChain stablecoin USDG, and while also being there for the liquidity mining rewards and voting. So, as I said, these programs, liquidity mining rewards and programs, we have introduced in our DeFi. Using the stablecoin, we have introduced in our DeFi ecosystem, and we are building it right now as we speak. And yeah, we have exciting times ahead. So this was all for today, guys. I hope you enjoyed, and thanks and stay safe. Bye bye.